So let's start with the big picture. You called
Sure.
it the Trump Man Show. President Trump's recent Liberation Day's tariffs sent another ripple through global markets. So how are you assessing the current environment?
Yeah, listen, it's a very unique environment, but it's a step change. And I think we need to understand that this change in tariffs is different to what we've experienced, where we've had this globalization. And while people think that 10% tariff rise is not a lot, it's a significant amount, and it will have a natural impact on trade and activity. And it has lots of nefarious effects on an economy. So maybe we can discuss that at some stage.
Well, yeah, we want to get into what the effects will be, but I think let's hold on this Trump man analogy.
Why did we do that?
You've introduced, because you didn't just label the Trump man show. You also cast all the main characters in this movie.
Give
us a sense of who
it's a bit of a spoof on the Truman Show.
Yeah.
And listen, I think it's a really good show because the Truman Show was about a lifetime. Well, this is the story of an electoral term that feels like a lifetime.
Yes.
So, and definitely, it's almost a reality show because everything seems to be focusing around Trump, and he obviously is a reality TV star. Now, the Truman Show happened years and years and years before reality TV, years before even Big Brother, right? And years before Facebook and everything. So it was quite futuristic in its view of how people would get so involved in this media form. And Trump is a master at this media form. He really is. And it's just amazing that we're talking about Trumponomics now. And I did do a little bit of a comparison between Trumponomics and Reaganomics, because when I was growing up, Reagan was in place and there was a new theory coming through, and that was monetary policy coming through. Now, I think that has a lot more credibility to it, but this is definitely a step change.
So if we were to sum up Reaganomics, it would be things like, raising rates, getting on top of inflation, massive deregulation, trying to shrink the size of government and lower the tax base. You've got more
and also free trade.
And free trade. So if we compare that to Trumponomics, what will the headlines be when history's written about Trumponomics?
Trumponomics is much more about, it's more isolationist. It's America first. It's very inward looking. And again, it's also very transactional. There's been a lot of trust that's been broken in the last 3 months. And I think that's something that it takes a long time to build up. You can destroy it really easily. I don't just think this is an easy negotiation. And so I think some of the stuff with China, we've delayed for 90 days. As far as China's concerned, that's a great delay because they know he's got a set time period before the next election cycle. The lower house election cycle. So it's quite an unusual time. But basically it should lead to less productivity. You're going to have higher general prices, and you're going to have less efficient industries as well. Because if you've got a tariff, it means you can compete, but you're not getting the best thing. And so, the global supply chain is quite an evolved creature. We've had years of the benefit of this, which has decreased the cost. Clothing used to be a lot more expensive in Australia. Just as one example. But, electronics and alike, these costs could go up. Now, how that translates through an economy and how it affects demand and how people react to it. People could go around the US, which would be quite bizarre, right? We're starting to negotiate with the EU now, and all the issues that we had around brand names with the EU, they're saying, oh, don't worry about that. Let's just do free trade.
Yeah.
It's an interesting sort of time, right?
So you mentioned there 3 hallmarks: lower productivity, higher costs, and one other that I can't remember. But
less competition and efficiency. So productivity is a really key thing. So lower productivity means a lower growth rate.
I was going to ask though, it does sound like we're introducing the S word into this conversation, stagflation. Do you see that as a potential outcome?
Yeah, listen, it's a potential outcome. The way most economists would look through this is if they have a one-off jump in inflation, it's sort of like a GST. And you probably weren't around when GST was instituted, but basically people look through that one-off tax They look because it's how it affects the inflation expectation that people are worried about. Now, you can get a one-off jump, and that might just be in the US, right? So think about it. Like you've got the US with this one-off jump, and then it goes normally. You know, that's manageable, but there's a risk of it, right? And also, you know, the central banks made a mistake earlier on. They were a bit late to the party when inflation increased. So I think they're going to be a little bit more conservative.
Well, there's been plenty of conjecture, Richard, and in one of your most recent webinars, you listed out some of the rumours versus the reality. Can you take us through some of, I guess, the big fake news that we're hearing and what is actually taking place?
I'm surprised that Trump was re-elected in a way because there was so much volatility around that stuff before. But this is next level, right?
Yeah.
So, but the market seems to take on these theories. Like, you know, the big thing was China was a big seller of bonds.
Yeah.
China wasn't a big seller of bonds. Like, you know, Japan sold a bit. The big seller of bonds were hedge funds that had $1 trillion basis trade between bonds and interest rate swaps. They had to unwind that because the basis swap went against them. And obviously, when volatility goes up, when they're borrowing for those trades, people close down those trades, so they haircut the trade.
Right.
So it forced them to close out the trades. Then there were a few people that lost their jobs around that. $1 trillion, that's more than China owns.
Yeah.
It's nuts, right?
Yeah.
So that was a big thing. And also they say that bonds didn't provide protection. Bonds did provide protection. Like, we went through the numbers. Like, you know, the bond index versus the S&P 500 gave you really good protection because general interest rates came down in that month of April. So it was really interesting. But those sorts of things are quite concerning, but it undermines things, if you know what I mean. If you have a reserve currency with an absorbent privilege like the US dollar, that's an issue. So we have some issues to deal with and get over.